continuing to seesaw. Questions again remain about what is next. Trump last night suggesting that we need to get people out of Tehran. That has not had a significant impact on gold, surprisingly. Silver is the big winner right now, up to 37. We've talked about silver, how to trade it, and kind of the momentum behind it. We have a little bit of a conversation today about Citi, which has called time out on gold's rally. I'll show you exactly when to trade gold based on that note that came out this morning. And we are watching the VIX. Again, the VIX is up pretty, moving toward 20 this morning. UVXY, keep a very close eye on that. Remember, nothing really good happens when the UVXY gets above its 20 and 50-day EMAs. So very close eye on that. We did a little bit of a session on that yesterday, the things that we have to be paying very close attention to if there are broader jitters in this market. Obviously, we have the geopolitical tension concern here, but the question is now, with the combination of Israel and Iran and adding on uncertainty around inflation, uncertainty around what the Fed's next move is, and the fact that we kind of come out of very overbought territory, significant buying, and a lot of action in the market where just one piece of bad news has the potential to take us in the other direction. Again, I am not going to be the first person over the wall trying to go against the market, but I have walked you through a variety of different ways to monitor this and when it is optimal time to really take that shot and to hedge in the event that the market is teetering. So once again, go back, always look at the FNGD. We are about 5% away from this simple moving average. Exponential, still a ways to go. But as you've seen, and we've talked about this before, nothing really good happens in the market when we break above those 20 and those 50-day moving averages. And the first move above the 20 is typically where there is a lot of uncertainty. Our signal right now is negative on intraday, but the broader weekly momentum remains positive, so we don't have that confirmation. It is 8:48. I hope you guys are off to a good start this morning. And again, why are you tuning in? Because if you look at your portfolio before 9:30 or at 9:30, you're in trouble. This is a very difficult market. And as we talk about the pre-market, we've seen a lot of funds, CTAs, money managers effectively manipulate the market in pre-market hours. And then once we get into 9:30, that's where a lot of retail traders become the exit for a lot of the positions pre-market and overnight. So this is why we do this show. This is what we're going to be talking about the next 30 minutes. Stocks that are worth engaging today, whether this market's safe to trade or if it's a trap, and exactly where smart money is positioning. And we'll walk you through some of the key technicals that we need to be watching. But first, let's get to that list, right? So momentum, broad market momentum. And for anyone who is new here, what we're talking about, we analyze the numbers of stock breaking out versus the number of stocks that are breaking down, and that gives us a positive or a negative number. When that number goes negative, that is when we are on alert because money is leaving the market. Now, in this environment right now, the question is, where is it leaving the S&P 500? It's leaving the S&P 500 at very distinct places. And what I'm specifically talking about, we can look at the very specific sectors that are involved. The stocks that are kind of breaking down at the moment are not the ones that really matter. The ones that matter the most, where the big capital is, where all the institutions are locked in, those are the Magnificent Seven stocks. Those are the stocks that are part of the big weight of the S&P 500. But we have to pay very close attention to the underbelly of the market because it can signal where people are taking some profits, where people are walking away, and what sectors are potentially weak. And as we look at this right now, the core focus is in the industrial side and in the consumer cyclical side. The industrial element is interesting for a number of reasons. It can include, in the case of airlines, the fact that higher oil prices will impact their bottom line. If we look at some of these other institutional names, Old Dominion Freight Line and Pool Capital are actually terrific companies, very strong, capital efficient companies. You don't have to put a lot of money into them in order for them to succeed. And they're getting beaten up. And that is definitely concerns around the broader economy. And if we look at the cyclicals, Best Buy, Expedia, these are largely momentum stocks, the way that they've been trading over the last 4 years. But there still is that narrative that higher interest rates and squeezed consumers, the questions about consumer confidence and how much money consumers have on their credit card is going to weigh on this. And with the Federal Reserve going to make an announcement tomorrow, not really going to cut tomorrow, not going to make any significant policy shift, except the question is, when do they make that next cut? And at this moment, there are more and more people like me who don't anticipate another cut this year. So we have these odds of cuts coming in September and October. It's going to require a lot more weakness in this economy. We're not seeing that yet. This economy is not really facing recession in terms of the Keynesian way that you analyze it, meaning how much money is spent and how much GDP there is. Now, why does this matter? Because we have effectively been in an environment where government spending has helped prop up this market, helped prop up this economy. And we did not see the massive cuts that we were expecting. So with a lot more spending down the pipeline and a big bill in the pipeline right now, that is likely going to continue to spur a lot of optimism around this economy, even though there is underlying weakness and a lot of questions moving forward about the consumer and interest rates. Now, as I've noted, it is not the Federal Reserve that is driving the bus in this economy right now. It is the Treasury Department selling short duration bonds that help spur more capital in the system, which actually helps drive equity markets. Right now, looking at some of these other names, you see ENPH is getting beaten up really badly. This is a policy issue. And the Senate bill that has been proposed, that big, beautiful bill that everybody has been talking about, as you look at this, you see a huge move down 20% because the incentives and the subsidies are expected to be cut. Now, what's interesting about this, and you could see in the weakness stocks, the companies that are on our watch list, First Solar and ENPH, this broad news, this weakness that it persists, becomes an opportunity for people who are trading today. And where does that opportunity originate? There are two places today that I want you to focus on if you are opening up opportunities to trade some of these stocks that are getting absolutely pummeled. Because right now, ENPH is down massively, 20% move today. And short sellers are definitely enjoying this move because a lot of people probably had some insight into what was happening. What happens in this environment, though, and this is very important, what you're looking at is TradingView.com. And TradingView has a tool on it that is called volume weighted average price. So if you go to TradingView.com and you type in ENPH and you bring up ENPH, you will then move over to a 1-minute chart. You will then go to indicators and you will type in volume weighted average price. It will produce this chart. Now, this chart right here, that blue line, is the 1-minute volume weighted average price. This is an anchor of price movement transpiring within the last minute that goes on for the entire day and anchors back to where we started this afternoon or this morning. What's important about this, so very important about this, is that this is where so many algorithms are anchored. And we will see through the day, typically price across the market, S&P 500, pick anything on high volume, there will be trajectory to bring it back to VWAP and bring it back like a magnet. But what are we looking for? This is the first standard deviation of price. 1 minute, 1 minute. If we add on different bands and we look at standard deviation, what we will be looking for today is continued weakness in this stock. Stocks like ENPH and First Solar and Sunrun and everyone else in this space, if we get down here into the third deviation of price, that will actually become an opportunity for investors to try to make a very quick, short gain by simply trading the reversion. Okay? So if you get down here past the third deviation, that is where we have seen time and time again, algos step in and cover positions. Short sellers will cover positions down here in the third to fourth deviation of price, which means there is a possibility for a quick gain of $3, right? Because this is deviation of price. You could potentially buy an in-the-money call that expires this Friday at $34 and look to ride that back up to 37. And you have a naturally baked in floor down here in that fourth deviation. So you buy the in-the-money call that expires Friday. If that opportunity arrives, you set a very tight stop, but then you look for that reversion back to VWAP. We've done this time and time again with the S&P 500. I've said the most important chart that you can watch during the day is simply to have volume weighted average price in the top left side of your screen. And the reason for that is because we do have these moves that happen down here into the third deviation where algos cover and then all of a sudden the market moves higher. No explanation why, not news driven, just entirely built around algorithmic moves. So because there's zero date options and because there are opportunities to trade this, you can see these moves down into the fourth deviation have led to sharp rebounds that aren't, they are only 1 or 2 points on the SPY. But if you're using zero date, if you're using short-term options, if you're using things that expire at the end of the day, these can lead to massive profits simply because you're playing the in-the-money call that is expiring at the end of the day. Volume weighting average price, if you could trade it a variety of different ways. If end phase does rebound and you're looking for an entry point to trade it for the day, a very simple way to do that is just to buy the stock right when it goes above volume weighted average price. If we start to move higher today, if we rebound and we get to 37.18, buying the stock here and selling it at every level up if that squeeze continues. There is going to be a period of time in the near future where algos and institutions step in and cover those short positions, which creates forced buying, which leads to short-term runs higher, even if the stock is going to turn back around and sell back off. This is simply how price action works. Markets do not go straight down. They go and equities don't either. As you could see with end phase, this stock over the last year has taken a stair step down as it has continued to sell off because institutional holders can't dump everything all at the same time. Otherwise, it creates panic. Otherwise, it creates instability. And also remember that there are a lot of institutions that are selling to one another. You don't want to screw over your counterparty too badly, because of resultantly, you might not work with them again. That is the lesson of the film margin call. So what will we be looking for in a company like Enphase? Ironically, another move higher at some point soon, followed by another move down. First Solar is in that camp as well. These are names that are going to get beaten up today. And as you can see, the other thing that's interesting about this is these moves really transpire around these 20-day moving averages. First Solar, when it gets above its 20-day, has seen very strong moves over a 1-week period. 40-point move in September, just moving above its 20 and its 50-day. So you're going to look for these names. Again, the stocks that are beaten up the most, the ones that are the dogs of the S&P 500, the ones that have the worst headlines, these become your watch list. These are joining your watch list because at some point that coverage is going to come. At some point, they're going to break these technicals. And at some point, they're going to move higher. I don't know what you guys are talking about in this chat. A lot of chats about sanitaries and oxygen levels. Come on, let's focus. There's a lot going on today. There's a lot of opportunity. MGA, we talked about yesterday. It is all about Palladium, right? Palladium is back in focus for us again. And the core thing with PALL, which we talked about yesterday, very key technical levels that we are focusing on. In the event that Palladium drops back down to 83, it is a strong buy. But if we come off this 20-day moving or 50-day moving average, that becomes the first entry point. This becomes the second entry point. And in the event that we actually do start to see strength, the buying into the strength is somewhere around $98 to looking for a reversion over the long term. Palladium, once again, we walked through this yesterday. Very strong industrial metal, very critical to auto catalyst converters. And as I explained, the EV mandates are largely going away. And there will probably even be a lawsuit against California about those mandates. And that will probably end up on the Supreme Court of whether or not uh, California auto laws are going to dictate policy for the United States. It is a brewing story. And as I noted, gasoline will remain the dominant fuel for the foreseeable future for at least the next 25 years in the United States. So all of this weakness that has transpired, this is setting up for a terrific long-term opportunity, which we will continue to dig into and look at in the future. TSLS is also back in focus. This is Tesla. As I noted yesterday, when it comes to consumer cyclical stocks, TSLS, Tesla really is the cyclicals. It really is the what about MA and V as buys on the third and fourth DU? I will answer that question in a moment, Bob. The core thing here is we are looking for TSLS to break above its 20. At that point, it becomes an in-the-money trade. This is an inverse Tesla ETF. We're always waiting and looking for Tesla to go one of two directions, above its 20-day and under its 50-day. That is where there is ample opportunity for momentum. So in this case, if we're going to be shorting Tesla, we look at TSLS, which is an inverse ETF, but does not have any leverage to it. That means there is no decay in this fund. And as we've seen, when Tesla sells off, TSLS does very, very well. The best way to trade that, a short-term option in the money, buying in the money and setting a tight stop somewhere around 20 to 25%. The goal here is to make 100%, 200% gains, and we have very tight stops in order to manage it, and we just keep reloading until the market does want to finally sell off Tesla. All right, with that in mind, we're going to dig a little bit into some of the headlines momentarily. Carvana is also a name that I want to keep a very close eye on. This has been an absolute darling stock for the last few years. This stock has gone from $5 or $6 to $365. It is starting to break down. And once Carvana gets under its 50, not a lot of good things happen to this stock. So this will become a short relatively soon. I will probably be trading this today if we continue to see this pronounced weakness. And as you've seen, when we have these drops under these moving averages, there is a way for it to go. So there is potential here for another 30 to 50 points in Carvana if we break under this 50. Because once again, nothing really good seems to happen to a lot of these high momentum cyclical stocks when they break under these key moving averages. So it will be testing around that 284 level. We get under that, a lot of weakness is likely to persist. I do want to remind you that this chart that you are looking at right now really did set us up. Anyone who was already on top of it, the ADX turning, flipping on the 13th, that shift down on the RSI, dropping under 50 on the 13th. And that was after we broke under that 20-day EMA. So there is still plenty of weakness on tap here, and this could get really, really ugly really, really quickly, given the fact that I don't really care that it's trading at 100 times earnings, but I do care that this has just been an absolute missile to the upside. And it just, again, I can't really sit here and say that the fundamentals warrant any significant opportunity. A lot of concerns around consumer stocks and a lot of concerns around auto loans and the consumer. So something to trade. You could buy an in-the-money put, and you could sell an out-of-the-money put to the downside, short duration, maybe within a month. And then you use that put that you sold as a little bit of a buffer in the event that the trade does not work out and starts to go the other way. IPI Kratos stock remaining very, very strong. Once again, KTOS. This has been an absolute darling for us since we've recommended it recently. We were selling puts down here, selling put spreads down here as a stock that we would want to own if there were weakness. We'll talk a little bit about trading that today. As I've said before, if you are going to sell premium, you better be ready to take the position. And as I have also warned, do not be selling volatility in any environment. At this point, you are picking up pennies in front of a steamroller. Insiders aren't buying, not doing very much at the moment. As you can see, this is the 5-day moving average, the blue line, 5-day moving average of insider buying to selling in dollars. And why does that matter? Well, when insiders buy, that's very bullish for the market. This is back here in December. And as we noted at the time, in December, we had a big sell-off around 3rd Friday of December right here. This was around the 20th of December. I was in the hospital at the time. It was wonderful. And we had a big sell-off, and what ultimately transpired, lots of buying by insiders, and the markets took back off again, strength into earlier this year. The last big round of insider buying was on April 8th, and resultantly, that coincided with a policy shift, big move on the NASDAQ, big move on the S&P 500, and momentum just took back off right there. Insider buying is the top contrarian strategy for broader market momentum and broader market policy. Insiders have called the bottom of every major downturn since 2009. Key things for today. You can't stay on a single slide for more than 3 seconds. What do you need me to do, Mark? So, MA and V as buys at 3rd and 4th deviation bands. So the core thing for a stock, like really anything that is high levels of liquidity, high levels of liquidity, lots of volume, 2.7 million for MasterCard. Anything like MasterCard or Visa or anything else that is very high volume during the day does become a buy at specific levels for short-term trading. But I do stress that you do want to stay in the 3rd or 4th deviation. So really, in this case, set your bands to the 2nd, 3rd, and 4th deviation. And what that does is it gives you a wider range. And if you do get down into here, into that bottom 4th band, that becomes a place where you might lift hedges, or you might change your strategy, or you might sell, or forgive me, you might buy. But this is where you're looking for those reversals. So yes, those opportunities have persisted. Those opportunities have obviously shown up in these bands, MA, Visa, the S&P 500, but you're specifically looking down here. And right now, as you can see, I'm not seeing a whole lot of those moves on MasterCard. I have seen it, obviously, with the SPX. That's the primary place where we want to be looking for this, particularly during the day, right? Particularly during those afternoon hours where you see very little volume, and all of a sudden the market just sells off, and people will say, well, what the heck happened? This is a good example right back here. That was on the, get out of there. That was on June 10th, so last Tuesday. We bombed out of the sky. This is, I believe, Jamie Dimon saying something about the markets and the bond concerns. You see, we got all the way down here. This is in the 5th deviation. Well, what happened? Market turned right back around and screamed. So this is what you're looking for. Keep that SPX chart up. And then what happens when the SPX gets into these levels, you flip over to the SPY. That's where you buy whatever is in the money on the SPY right at the tick, and you look for that reversion for the rest of the day. A couple of people have talked about this. Let us know in the chat if you've actually been able to trade this. If you need more instruction on this, I'm more than happy to spend an entire hour today or 45 minutes talking about it at the noon hour. This is really one of the more it's a very difficult thing to sit around and wait for, but when you catch it, it really is that perfect wave. I've talked about momentum and the markets and the ocean, and kind of taking the surfer analogy. Like, this is the wave that you're looking for. You're waiting for this specific pattern to show up, because as I've noted, if you're buying in the money right at the tick for what is expiring that day, your downside is very limited, because you would have to be taken into the 5th deviation. That's still even more of a reason for shorts and algos to cover. So you catch that and you buy whatever is in the money, and then you ride it up. And the way to trade that is by 3 3 contracts. You sell the first at the next deviation up, the second, the third, and then once you get above volume weighted average price, with your third position, you just let that one ride. You take small gains on the way up, and then you look for that last one to continue to rip higher. AMD. Well, once again, AMD, nice little push to start the market in the morning. Now we'll look for a little bit of a reversal. When I looked at VWAP, I always see a lot of support at the second and third sigma boundary. Yep, because one of the things about that, Mike, and what my thesis is on this is that institutions do their best to not sell so much that they push down into those lower bands. And Stanley Druckenmiller talked about this in 2018. He said there's really no trend to the market in terms of how price action coordinates. He said what you see is that algos are buying down in the third deviation of price over and over and over again. So if you think about this logically, and I think Don could probably comment on this better than I could, but my expectation would be that you don't want to sell into those levels. You don't want to force that much volume. You don't want to press that far down. You want to have a structured selling. You want to be able to let go of the position slowly, because all of a sudden what can happen is that, ultimately, especially shorts, what ultimately can happen is you lead to that squeeze. And you got to remember that there is always a very large contingency of people who are short selling. And there's always a very large contingency of people who are simply dumping positions, and they don't want to be selling it all at once. That can ultimately lead to, a massive drawdown in the stock. They're trying to still get the optimal price for that equity, right? The purpose of the market is to sell. Thanks for UK, Ray. All right. Israel, Iran conflict escalating. Markets remain on edge around this. Oil was up 2 to 7% on Middle East tension. This is a very difficult time to be trading oil. A very difficult time to be trading oil. If you are, though, and you are trying to make sense of this, what I would highly recommend is you take the OILU, which is obviously that leveraged DTM that I talk about for trying to time bottoms and tops in the oil market, and you bring the OILU down to the 3 or 4 minute chart. And what you're going to be looking for is for moves above the adjusted EMA, and you're going to look for any level of strength that you can get. You could trade the OILU. I do not recommend it, but there are going to be wild swings around the day. And as you watch the OILU, look for oversold conditions on the relative strength index and the money flow index, and use that as an opportunity to step in and buy things like the XLE, Exxon, some of the other big names. They are going to trade in the direction of that individual equity, and just look for these moves, short duration moves, and try to pick off and scalp gains as they come. This is all momentum, short duration. Doesn't matter which way you look at it. It takes a lot of money to keep things above these technicals. When they break down, they break down. It's a lot of algos talking to one another. I don't like this environment for trading oil because it is, again, it's so headline driven. It ultimately will end up going the way that you don't think it's going to go. What happens is this is all about CTA positioning. It's all about funds. There's going to be a lot of questions heading into Friday on what this commitment of traders report looks like. I would rather wait this out. I think what you see in this chart with the OILU and the way that energy prices are moving and the way that this impacts this sector, you're going to get 1 or 2 trades a month out of the OILU. And you just have to be patient and wait for it and go directionally based on these, the 20 and the 50-day EMA. We already had that move that happened last week. Now what happens is we wait for the next move down. And as you can see, you're getting at least 1 or 2 moves a month out of this. So just be patient and wait for those moves as they come and follow the conviction of those key indicators. Can I use VWAP as the 50-day moving average? You technically could, but I prefer to use it as the 1 minute volume weighted average price. Okay. In addition to that, obviously the Fed is going to be meeting. So, tomorrow I will be here talking about the Fed. I will get here probably around 2:30, 2:45. Brandon's going to be here live tomorrow at 1 o'clock. You do not want to miss that. He's going to be joining Don. He's 18 for 18. And as you may or may not know, he got out ahead of the sell-off in February 2 days before I did. He also saw the exact same thing that I saw in the energy sector and made a great trade on the XLE. Once again, it is not a coincidence that energy moved a week before all of this information happened. All of these events happened with Israel and Iran. People are very well aware of how policy shifts are. We had known that there were things that were happening with our embassies, but the movement on the stock and the movement in what was happening in the underbelly of the market, Brandon picked up on and had a phenomenal trade with the XLE. Heading into July. So what is next? Well, that's why you want to be there tomorrow at 1 o'clock. And then I will be following up with the Fed meeting. We'll talk about rates tomorrow. We'll be very, very cautious, expecting the Federal Reserve to not make any significant move. But I will be focusing on the 2:30 trade. And what we have seen in the past is that the Federal Reserve, after Powell speaks, there is a very specific direction that the market does like to try to move. It is that last hour that I'll be here tomorrow that's so critical. We are going to be looking for institutional selling tomorrow, and there could be some very fast and furious moves as a result. For Carvana in the money put, what would be the zero date? I mean, if you're focusing on that and you're using the 20-day EMA, probably go out into July. Otherwise, if you are a little bit more aggressive, it may just be for Friday. If you're willing to play more of a lottery pick and looking for a continued sell-off, it would be cheaper, but obviously, if you have in the money or at least a put spread, the opportunity there is just to kind of keep it tight and look for directional movement downward tomorrow. That's kind of the way that I would do it and be a little bit more speculative around that moving average, because right now that weakness in the cyclicals is very persistent. Keep an eye on oil. Keep an eye on gold. Very strong. Keep an eye on defensives. That's the next thing, right? The rotation to defensive stocks, and volatility is on the move. Key things for today, solar stocks. We walked through that. Palantir is at an all-time high at 141. Do not continue to chase it. We want to be listening to what Blake says on this. Blake had a phenomenal trade on Palantir with me a couple of weeks ago, where he was using put spreads in order to scalp in this market. We'll be looking for another way to trade Palantir later today. T-Mobile's under a lot of pressure because of SoftBank. I want to point something out. I have a very strong feeling that this is more about SoftBank than it is T-Mobile. Once again, SoftBank is facing a lot of challenges, and SoftBank is dumping relatively stable businesses for the purposes of speculating in AI wherever it can. There's a lot of focus today in the biotech, the AI stocks. Avoid solar short term. Look at avoid solar in terms of trying to buy it for the long for 3 to 4 weeks. Instead, focus on the short duration trade, if that comes using volume weighted average price, or things like the 2050 adjusted on your 3-minute chart. And in addition to that, if you're the core thing heading into tomorrow is just looking at the semiconductor stocks. Semis are obviously the big driver of the market right now. If this breaks down, it will break down very hard. Just pay attention to the SOXS. Nothing significantly good happens to semiconductor stocks when our signal goes negative and the SOXS goes above its 20 and its 50-day moving average. We've had 3 negative signals, August, September, December, and March. And as you can see, there have been sizable sell-offs in semis 3 of those 4 times. That's what we're looking to do in the event that we do see this market turn sideways. There will be a time relatively soon. It might not be tomorrow. It might not be a month from now. It may be in 3 months. But there is going to be another panic and a lot of higher volatility, and there's going to be a lot of opportunity to short the semis while everyone else's hair is on fire. We'll be looking to profit. So stick with us here at TheoTrade Market Masters. I hope you guys have a great day. Don is coming up right now, and I'll be back a little later today. Reminder, Tomorrow, 1 o'clock, Brandon and Don, and I will be back for an encore in the afternoon to cover the Federal Reserve. Thanks, Kenneth. Thanks, Scavenger, Lynette, everyone else. Have a great day. I appreciate your time. Have a great trading day.